What is a line of credit? A line of credit is a line that you would go to for a bank. Typically this is going to be used for your business, right? You open up a line of credit and it just gives you the ability to draw a certain amount of money. So typically when you get a line of credit, you could get a line of credit that is, let's just say, $200,000 for your business. That gives you the ability to tap into that line of credit whenever you need it. So typically all you have to do is log in and draw, and you could deposit, let's say, $50,000 in your account the next day and use that for any type of business use versus a loan, right? It's very important to understand the difference between a line of credit is the line of credit you can tap into whenever you need it, and you're only going to pay based on how much of that line of credit you drew. Okay, so if you have a line of credit up to $200,000, that means that you can take any amount from, let's say, as little as $5,000 all the way up to $200,000. And your payment, what your monthly payment would be, or some of them actually have a weekly payment as well, but your monthly payment would be determined by how much you draw. So in that scenario, you don't have to take the full amount, but it's available to you. Versus a loan. If you get a loan, whether it's a simple interest term loan, or if it's a SBA loan, or just a standard business loan, you are going to take the full amount of that loan. For example, if you did an SBA EIDL loan, right, during the pandemic, and you got approved for the max, which is $150,000, you took the $150,000, you're paying interest on the $150,000, and the payment is scheduled for that $150,000. There's no flexibility after it. Once you take a loan, that's it. Where a line of credit stays open as long as you have great payment history and you can draw on it whenever you like. And most of the business lines of credit from a fintech perspective are either going to be 6, 12, 18, or 24 months. Now, what are some of the benefits of a line of credit? First, it's going to build your business credit. Second, you have access to financing whenever you need it. Why is that important? Well, if you have things that you can do to better the business, it's super, super important to have access to capital, right? Maybe you have an opportunity that comes up and you need the money really quickly. Having that line of credit ready to go, you can access that. Third, right? Another huge benefit of having a line of credit is really having it just in case something goes wrong. You never know what could happen in your business, and having that access to cash is so vital, right? It really does give you that flexibility. And most lines of credit are shorter term. So when we talk about shorter term financing, you're really talking about, 6 to call it 24 months, maybe even 36 months. You can use a line of credit for things that you do every day, meaning purchase inventory, marketing, getting or adding staff, supplies, anything that is like a short-term use that you have to continuously do is best to use a line of credit for. Get the benefit from, hey, I'm going to run another marketing campaign, you increase your sales, then you wind up paying that line of credit down, and then rinse and repeat that process. And that's how you can build and scale your business much quicker, by having a line of credit. It's 2021 now. We're just getting over the pandemic. A lot of businesses failed because they didn't have access to financing. So I think every single business in America today needs a line of credit just in case something happens like that again, right? It is so important and so vital to have that access to financing. And at the end of the day, if you use a line of credit for short-term needs, you're going to be able to grow and scale the business much quicker. What I wouldn't use the line of credit for, and this is important, I would not use it for buying equipment, buying a car, buying a building. It's not intended for that, right? That's what you use equipment financing for, or an SBA CRE for. And the reason I say that is because those programs typically go out a longer period of time. You want to use a financing program that matches the use of life of what you're doing with the funds. For example, a piece of equipment or a truck or a car, you're going to use that at least 5 years, maybe more, right? So you should get equipment financing that goes out 5 years and pay for it over the life of the time that you're using it, right? You don't want to tie up your short-term lines like a line of credit for long-term uses. Same thing with a building. A building, you can get a 20-year or 30-year mortgage to buy. You're going to be paying for that over the lifetime of you using the building. Don't mix the two up. Use the line of credit for short-term needs, and you don't ever want to, max out your lines. When you max out your lines, it's going to decrease your business credit, right? It's going to show that the business is under a little bit of stress, a little bit of pressure. Now, what are the qualifications for getting a line of credit? You usually have to have 650 credit or better, personally, at least 1 year in business, and you want to be doing at least $40,000 a month going into a business bank account, keeping great cash flow. What does great cash flow mean? Well, it means that there's no negative days in the bank. It also means that you're keeping an average of, let's say, $1,000 or $2,000 in the bank at all times. And basically, that helps show that you can service the debt. The other thing they like to see is that you look at deposit count. I know a lot of people that's counterintuitive and it might not make sense, but underwriters look at deposit count because they want to see the number of clients that you have. So if you have a low deposit count, it's probably because you only have a few clients, and that means the business could be viewed as a higher risk. Versus if you're depositing, 20 deposits a month, you have more clients and it's less risky. That's just a little inside tip. To get a line of credit set up, it's pretty simple, pretty easy. It's usually just a quick application. It's 6 to 12 months of business bank statements, a tax return, a driver's license, a voided check. And usually we get these done and approved in 24 to 48 hours, and then the line's up and going and ready from there. If you are interested or you would like to get a line of credit, you can always go to integratedbusinessfinancing.com, contact us, and we'll be happy to work and set that up. I do want to stress that if you do not have a line of credit and you're trying to grow your business, you really should get one. Every single business should have a line of credit. Thank you, and I'll catch you on the next training.